Hi there, I'm Tyler Bollhorn. Welcome to the Stockscores Market Minutes for January 2nd, 2010. Starting us off, we have a table of the charts that I'm going to look at today. We'll go through each one individually, and I'll try to define where those markets are likely to go in the near term. Now, starting us off, we have a chart of the Dow. This is the exchange-traded fund for the Dow, symbol DIA. You can see that we are in a nice long-term upward trend. However, the Dow has found some resistance right in here, and it seems to be unable to break through that. So the long-term picture is one of optimism, but in the short term, there is some selling pressure that is keeping large-cap stocks from breaking out. The next chart is for gold. Again, this is the exchange-traded fund for gold, symbol GLD, and you can see that gold has been in a great long-term upward trend. It really ran away from its trend over the last few months, where the trend got way too steep, as you can see here as I'm drawing in green, and that eventually means that the sellers are going to come in and take some profit, and we've seen that over the last month or so. Now, we may see gold sort of base in here, but I think it's going to take a little while before gold goes higher. So I would give this a neutral rating, simply because that exuberance that came into the market early in December, late in November, is going to take some time to overcome, and so I would be cautious with gold in the near term, although the long-term picture still remains pretty good. Now this is the long-term chart for oil, and you can see that oil's been in an optimistic consolidation over the last almost a year. We have rising bottoms in that consolidation, which is encouraging, but what is probably discouraging for most oil and gas traders is the fact that we've just been locked in this sideways trading pattern for some time. Now if we look at a little bit shorter term view of the oil and gas market, you can see that we've had a pretty good run over the last few weeks, but really all that we have done is come back to the downward trend line that I'll draw right here, and because we're at that downward trend line, I would expect that the oil market will get stuck next week. And so if you're an oil trader, you may see some of the people taking profits in oil by itself, but also in the individual stocks that are based on oil and gas stocks, obviously. Here we have a chart of the Nasdaq 100, which has been really the best performing market in the last short while. Nice long-term upward trend. And what's interesting about the Nasdaq is it broke out through resistance, unlike the Dow, maybe a week or two ago. And it's had a good little rally there. Now I think that we may see that strength fizzle in the short term. It might have a little bit more upside to go here, but if you sort of consider that as an upward sloping channel, look for a pullback in the near term, then one more rally to the upside before the Nasdaq market gets stuck. So I like the market, generally speaking. I would put it as an optimistic one. I just think in the very short term, you're probably going to see a little pullback, and in the longer term, trend continues until it gets to the top of that upward channel. Here we have a chart of the S&P 500 Exchange Traded Fund, SPY, and we have some resistance that is forming on that market. Probably continues to hold these stocks back in the short term. There is good optimism longer term. I think that you want to remain in stocks in general. Just realize that there is going to be some hesitancy to be a strong buyer of stocks as we start off 2010, simply because of that line of overhead resistance. And finally, here is a chart of the TSX 60 Exchange Traded Fund. T.XIU is the symbol. Pretty decent overhead resistance there, but long-term optimism with the rising bottoms, as we've seen in all these charts. One thing to keep in mind with the TSX is that unlike the American markets, this one's been in a sideways trading range, but when you factor in the currency effect, this market has actually been outperforming the US markets, because the US dollar has been falling during the period that I've drawn these lines for, and then in that time the Canadian dollar has been rising. So in real terms, for a foreign investor, the Canadian market has been doing quite well. This is easy to see when you look at a chart of the US dollar index. You can see that real long-term downward trend in the US dollar. Now that was broken a few weeks ago, and you would think that that would hurt the Canadian dollar, but in fact the Canadian dollar has been doing quite well as the US dollar. So while the US dollar has made a good bounce, the Canadian dollar has continued to hold up well against the US dollar. What we're looking at right here is an exchange traded fund that represents a basket of global currencies, including the Canadian dollar, and most of those currencies have fell over the last month relative to the US dollar. The Canadian dollar has actually done quite well, and so that's helping the TSX market, even though it appears like that market is locked in the trading range. So to summarize then, I am neutral on the Dow, neutral on gold, neutral on oil. The Nasdaq looks pretty good. I'm going to put an optimistic rating on the Nasdaq. The S&P 500, we're going to stick with neutral, although it looks better than the Dow. I just think it's going to see some resistance there. I like the pattern building on the TSX. It hasn't made the breakout yet, but I'm going to put an optimistic rating on that one. And the US dollar, where I've been bearish for some time, I'm actually going to switch my rating now to neutral because it looks like that market, the market for the US dollar has at least broken this downward trend line. I think it may take some time for it to start an upward trend. These markets rarely make V bottoms, but I do like how it's turning around. Finally this week, I thought I would show you a quick market scan, or the process that I use to go through the Stockscores website to find opportunities. I've clicked on Tools, gone to Market Scan. I'm going to select a preset scan called the Stockscores Simple. You can see it here from the pull-down list. Select that. Now I can choose to run it on all the markets, or I could choose to run it on a specific market. I'm going to select the All Canadian part here. We'll just run a market scan on the Canadian markets. Click on the Market Scan report, and it goes through for me and identifies the 25 stocks that meet the criteria of that particular strategy. Now, of course, with the market scan, you can use our preset strategies, but you can also use any of the settings on that market scan filter to create your own. Now, the next step is to look at the charts of the stocks that the market scan found for us. So I'm going to select all and click on Go. We're going to view these charts now, 10 per page, and we'll cycle through them looking for stocks that have decent chart patterns. Now, for example, here's a stock that has a pretty good looking chart pattern. You can see that we have a this ready here. We have a ascending triangle pattern here forming. So we had rising bottoms, we have a flat line of resistance, and notice on the last trading day here we had a pretty good break on abnormal volume. Now, my main concern is that this stock only traded 193 times on Friday. That's pretty decent volume, but you know, if every reader of this newsletter went out and bought the stock, it would probably go up because it doesn't have the same kind of liquidity as many of these stocks. With that said, I still like the chart pattern. It looks pretty decent. Now, of course, if you wanted to see the chart in more detail, you can actually click on the chart and it will blow it up in size so that you can look at a little more detail on that chart. Let's continue on. Here's a stock, MGX, which really made the breakout that we'd like to see 2 days ago, and it has followed through with that. But that's really what we're looking for, is these breaks from sideways trading with that abnormal volume. Now, if you look at this stock here, it's a decent looking chart as well, but what it lacks is that break from sideways trading. This stock has been in an upward trend for a number of months, and you can see that here as I draw a green line there. We've really got well into that trend. So when you're looking at charts, you want to find stocks that are beginning an upward trend and not already well into an upward trend. I like to see abnormal volume breaking out from sideways trading, from optimism, which is rising bottoms on the chart, and from that low price volatility, a period of sideways trading. Now, all of these things are taught in the Stock School Home Study course, which you can order through the Stockscores website, and keep that in mind for those of you who want to learn a little bit more about the Stockscores methodology. Well, that concludes the Stockscores Market Minutes for this week. I hope that you have a great week in the market and trade well.